Hello again. So, now that we've added our quotes, we've got all the instruments that we're interested in trading, whether there will be currencies, stocks, cryptocurrencies, IPOs aren't really tradable, but you get the futures, as well as a whole bunch of other things. Now that we've seen also all of the charts, how you can configure them, how you can double them up, how you can expand and analyze more than one instrument at once, see how you can add indicators and everything else, it's time to see how you can actually go about opening your new positions. So in order to do that, look, everything is real simple. You select the charts that you want to trade. I highly encourage you to open the positions directly from the chart because you want to see at all times what is going on. Otherwise, no, something might happen that you might not really wish that happened. So once you've opened your charts, once you saw what is the current situation, and you're certain about the kind of position that you want to open, the only thing that's left to do is to click on that file button with the plus icon, I guess, in the top right corner of the screen, just right here, and it's going to open up this screen for you. Now, by default, if you're at all familiar with the default desktop version of the MT5, you know that there are two main types of execution. There's market execution, at which you're buying or selling a particular asset at that point in time, at that instant. And there is a whole bunch of things that you can do if you want to set a pending order. So if you don't wish to buy or sell directly in the moment, but instead you prefer to set up some position for the later time, given some conditions that should happen according to you. This is all a limit order is. Now let's start really simple. Let's start with the market execution. As usually, as it is, the same is the PC version. You've got a way to configure your volume. For all of the currency pairs, of course, it's going to be measured in lots. So one lot, which you can see over here, which you can play around with. If you press on that plus 0.1 is going to add 0.1 lot. If you press on that minus 0.1 is going to get rid of 0.1 lot. Same thing for plus 0.01 and minus 0.01 over there. So once you've configured your volume, and there are of course different ways which you can go about to determine it. Once again, if you're having trouble with it, perhaps write us in chat, send us an email or give us a call, because that's a whole topic for another discussion. But once you've determined effectively the volume with which you want to trade with, if you're on the demo, of course, it's not going to make any sort of difference. You can go for 0.5, 1, 10 lots, doesn't make any difference. It does help to develop the right kind of habits from the start. It's totally up to you. So once you've determined what kind of assets do you wish to trade, once determined what kind of position you're going to be opening, whether you're going to be entering the market or by pending order, you've set up your volume accordingly. Now what you might want also to do, which always helps, is to set your stop loss. You might not go for the take profit as usual, because as they say, cut your losses short and make your profits run. However, the stop loss is probably one of the most crucial things that you can always set up your account for. Because regardless of your system, regardless of how good it is, no system is perfect, and the markets are going to change, the conditions on the market might change, and if that happens, you want to be ready. You want to limit your losses as much as possible, and you want to increase your potential profits for as long as you can. That's probably quite intuitive, but it's something quite a lot of people forget. They tend to set quite tight take profits. They are really worried about getting out of the market as soon as possible, as soon as they see some profit. But on the other hand, they might wait for hours, days, even weeks, waiting for their positions to recover, even though the market might indicate that the things have really changed and the market's going to the opposite direction. So don't be like those people. Don't be on the 95% of the losing side. Be the smart trader. Set your stop losses right. So over here, we might have, for example, determined we're looking at the US dollar versus Canadian dollar chart on the daily time frame, and we might have determined this particular position we had quite a jump right up, and at this point in time we are 0.1.32317, 318, And analysis might indicate to us that, hey, given this kind of impulse, what might happen next is there could be quite a big jump down. So there could be quite a rebounds from this particular level. On this particular case, then we might decide to open a position and we might go for a stop loss, which we are going to think right away about at around 1.32550. So this seems to be quite good. Actually, we could set it up a bit lower than that still, perhaps around 3 to 400. Yeah, I believe that could be quite good. In that particular case, well, if we're going to wait it to jump back, from one point of view, it could go all the way back to 1.3430. But more realistically, since well, the highs of this particular candle formation have changed, what might happen with probability that's a bit higher than what's previously described is that with the chart could go to a level of 1.31490. Actually, let me use that crosshair to explain what I'm seeing over here. First of all, we had quite a jump over here, so we can expect with reasonable certainty that the price will effectively go down. Why is it go down? Because all of the people that have pushed the price so far up are probably going to be liquidating their positions, and once they do, effectively the sellers might overtake the buyers and the price is going to move down. So from this point, we might, therefore, if we're going to enter over here, which I'm going to do just in a minute, we might enter the position, we might set our stop loss at around this level over here. We had it, the price jump almost to that level not so long ago, but now it appears to be starting to going down, and since we are quite sure in our position, we might want to get out of it around this particular point. Why? Because at this point we have what will become at this moment a level of support from which it could rebound once again and then continue its movement up. So if we're going to enter over here, we might enter with a stop that is quite tight, and on the other hand, let our profit run to this level over here. So this would be around 1.315. Okay then, so let's get rid of that one, and we've decided that effectively we're going to be entering with a stop loss of 1.324. So let's do that. 1.324, 400 to be precise, and we're waiting for the price to go down to the point of 1.314. Okay, so we're entering the market right now, and with a stop loss of 1.324 and the take profit of 3.314. Beautiful. That's actually quite easy to remember. So let's paste that in over there. Let's set with the profit 314. Now the fill policy, which you might have been wondering about in the desktop version as well, is really quite simple. Fill or kill effectively lets you enter the price at the volume at which you want to enter, regardless whether any kind of slippage, so changes in the price, perhaps even unfavorable to you, occur or not. On the other hand, immediate cancel means that if you're entering with a certain volume, you want to enter with that kind of volume, with that specific kind of volume, at that specific price. And if it's not possible for any reasons, there's not enough liquidity, the other side is not there, or whatever happens, the order is simply going to get cancelled. For the most part, you always want to go for fill or kill, and in some particular case, you might want for an immediate cancel. For example, if you're really concerned about managing your position correctly. For example, it's quite useful in the pending orders, but we're going to go through those ones some other time. Now that we've set up our order properly, let's revert that back to 0.5, which we entered. So we're going to be entering right now. So since we're going to sell by market, you can see that beautiful red button in the bottom left corner of the screen. We're going for fuel kill, and we are 7, so we are going for the bid price. The bid price currently is, you can see this blue line going up and down, and the current price of 1.32331. So that makes sense. We are going for the take of 1.314 and with a stop loss of 32400. That makes quite a lot of sense. So since we are going to be entering with at the bid price, because we are 7, our position is going to be closed at the ask price. Because if we are 7, we are going to be buying the asset back once we are closing our positions, and vice versa. So in this particular case, we're going to be entering the market by the bid price, and we're going to be exiting by the ask price. Now, if the bid price, as you can see, the blue line is just a bit down, 32320. The ask price is staying constantly the same, is at 1.32354. So if our position goes against us, we're going to be out of it at 1.32400, which we've set up over here. So that looks quite good to me. We've got less than 50 points of stop loss. We've got quite a profit. That's got potential. Let's go and sub by market. Here we go. He's been placed in queue, and here it went. And here we have it. One of our new position. If you click on this one, you're going to be seeing what's happening with it. It's already taken into account all of the commissions and everything else. So now we're basically still in the spread range. So the price, since we're entering at the bid price, and we're going to be close the position at the ask price, because the ask price is almost always higher than the bid price. In this particular case, we are already slightly negative because the price has to pass that distance of the spread before we start making any money. But that's to be expected. However, in terms of the charts, the position looking good. Here you can see the chart's already shown us what's our stop losses, what's our take profit, where the position was placed, and this is how you open your orders. Same exact thing would happen if you were to enter by buying the market. Once again, always remember about the stop losses, evaluate whether it would make sense to keep the take profit, to set it up or not, because there are some market conditions where the price can move and move and move for days, even weeks, even months. And if you catch that kind of trend with the stop loss as tight as it can be, then by all means, the financial market will be your oyster, literally. And that's essentially it. If you go back to trade over here, you're going to see the same panel, what's going on over here, all the swaps are going to be calculated, etc., etc. You can order your position by that. You can click on that button once again. It will take you to your last chart to open some new positions. If you want to close it at any point in time, just press it over there. You can go back directly to the chart, of course. You can go back directly to trade. You can tell it to open a new order, perhaps in the same dollars. If you're going to open, for example, a new position right now, if we were to open another position right now for Canadian dollar, to sell, for example, another 50% of a lot, so 0.5. What you might think could happen is that another position would get opened. So in that case, we would get two, one position for 0.5, another position for 0.5, but that's not exactly right. Because the way the MetaTrader 5 works is that it takes the average of your positions. Therefore, if we are going to enter right now, we're going to open another position for 0.5, what is going to happen is that that position is going to be added to this one. So the total volume for our position is going to become one lot and not 0.5 and 0.5 respectively. And the price at which you're going to enter is going to be the average of the two prices at which we've entered. And experiment on your own to see how it works. Really simple, that's something to keep in mind. And on the other hand, if we were to open another position once again on the Canadian dollar, but for example, we were to buy 0.5, I'm not going to do just that, you can experiment on your own, but if we were to buy effectively 0.5, so we get a position to sell 0.5, we're going to buy 0.5. What could happen, as you can imagine, is that that position is going to get automatically closed. Since we were about to open the sell, we're going to buy, those positions are going to cancel each other. So that's something to keep in mind. The locks, which are a bit known, so to speak, in the community of the MetaTrader 4 traders, are not really existent over here. That's something to keep in mind. And that's around it. Yeah, so we went through the quotes, we went through the charts, we went how you can open position, buy market. The next time we're probably going to take a look at the different kinds of pending orders that you have. Just go through them once again. We already covered them extensively in a MetaTrader 5 tutorial for the PC, the actual desktop standalone program. Perhaps we'll go through them once again over here. I will take it from there. Once again, got any comments, suggestions, complaints, perhaps anything? Leave us a comment, let us know. If you got some particular issues that you're having with your account, you're not really sure about the platform, you need someone to get in touch with you personally to help you out. Once again, send us an email, give us a call, send us a message in chat. We're always available. We're here for you. And we'll take it from there. So the next time we'll be taking a look at some pending orders, and until then,